Hello everyone, this is Abhijit Misra and welcome to my channel. In this video, I am going to talk about one of the financial instrument which is less risky but can compound your wealth between 12 to 15%. Yes, you have guessed correctly. I am going to talk about NIFTY BEES or NIFTY Index Fund. So this video I am going to divide into like 5 parts. First, I am going to discuss about what is NIFTY BEES and how the value of NIFTY BEES is derived in our stock market, and what are the advantages and disadvantages of NIFTY BEES, and what are the types of NIFTY BEES available in the Indian market, and how a person can build his wealth by putting or investing his money in NIFTY BEES. So first of all, what is NIFTY BEES? NIFTY BEES is a ETF that basically tracks the performance or replicate the performance of NIFTY index. I hope all of you know about the NIFTY index. NIFTY is a broader index that consisting of like 50 stocks which basically shows the performance of Indian economy by top performance of the top 50 blue chip companies. So NIFTY BEES is basically a index fund that replicates the performance of NIFTY BEES. That means if today Nifty is trading at like 10,000 and after 3 months Nifty is going to trade at 15,000. So if a person is investing like 10,000 in NIFTY BEES today and after 3 months he is going to sell his money, he can sell the instrument at 15,000. That means he can earn a profit of around 50%. That basically called as NIFTY BEES. NIFTY BEES is nothing, in a simple term, it basically replicate the performance of NIFTY index. That's all. And the second thing, how the NIFTY BEES value is basically derived in India. There are plenty number of NIFTY BEES available in the Indian market. So the most popular NIFTY BEES is basically Nippon India NIFTY BEES. So how the value of the NIFTY BEES is basically derived. So take the example, today Nifty is trading at like 17,500. We have to divide that index value with 100. So whatever the amount we are getting, that is basically reflect or replicate the value of NIFTY BEES. That means if the Nifty is trading at 17,500, you have to divide the 17,500 with 100. So that means per unit value or per NIFTY BEES value I am getting like 175 rupees. That basically shows the value of NIFTY BEES. The third thing we are going to discuss about basically what are the advantages and what are the disadvantages of NIFTY BEES. So first thing, the NIFTY BEES, we'll talk about the advantages of NIFTY BEES. The first advantages is basically you can start investing by as low as like putting your money like 500 rupees or 1000 rupees. Why? I told NIFTY BEES value is basically derived by Nifty divided by like 100. What are the value you are getting? That is basically NIFTY BEES value. That means right now the Nifty is trading in the range of like 170 to 180. So if you have 500 rupees also, you can purchase 2 point like odd percentage, like by odd like at least 2 like what I can say NIFTY BEES unit in your account. So due to that, a person who is earning like 20,000 or 50,000 and he wants to take a exposure in the stock market, then he can think about this like instrument that is called NIFTY BEES. So and the second thing is basically it is highly liquid. So if you talk about stocks, there are plenty number. There are around 700 or 7. There are around plenty number of stock which is not liquid. But in case of NIFTY BEES, entire NIFTY BEES is basically liquid. You can purchase at any time and you can sell at any time. So basically whenever there is a trading hour or trading days is available, so in that period you can aramse purchase and you can aramse sell the NIFTY BEES. That is the second benefit. The third benefit of the NIFTY BEES is basically the expense ratio. So normally what happens in a actively traded fund, like all the mutual fund whatever available in the Indian market, the expenses ratio range from 1.5 to 2%. But in case of NIFTY BEES, the expenses ratio is only 0.05%, which is very minimal. If you are investing 100 rupees, then you have to bear expenses of 5 paisa. So which is very what do you say, minimal in the current scenario. And due to that, what happened, if you if you stay invested in the market for a long period, then you can save huge amount of money by investing in NIFTY BEES. And fourth benefit is basically the return on NIFTY BEES is in the range of 12 to 15%. If you see historically, NIFTY BEES compounded wealth at the rate of 12.5%, which is I can say like twice than the fixed deposit rate, more than 2.5 times of the fixed deposit. Whatever the fixed deposit rate right now available in the market. So by putting the money in the NIFTY BEES, what is happening? You are compounding your wealth by like 12 to 15% per annum, which is also very risky free. In my next point, I am going to talk about why NIFTY BEES is basically less risky. So what happened actually in Nifty Bees? Nifty Bees is consisting of like top 50 companies. If one company is not performing, then other company will perform. If one sector is not performing, then other sector will going to perform. So due to that, what happened? So always the Nifty Bee will perform. Nifty Bee will grow. If the Nifty is not performing, at least it will not decline by 10% and 20% unless there is a war situation is coming, a coronavirus situation is coming. In such a case, it may happen. In case of abnormal like scenario, the Nifty index may decrease by like 10 to 12% or 15%. But normally in a normal scenario, you will not see 10% correction or 20% correction in Nifty Bees. If the correction happen also, it will recover. Example, so during the COVID time, what happened in the March like 20th, Nifty was trading in the range of like 12,500. During COVID, what happened? The Nifty declined to 7,000. But after COVID, what happened? Again, the Nifty increased to like again 18,000, 17,000 in the range. So due to that, what happened? There is a very minimal downfall risk. And yeah, so these are basically what are the benefits of Nifty Bees. And the last benefit is basically a person, a salaried person, if he wants to start his trading in future, if you are a person whose plan is basically at the age of 45 or 50, you want to start your own trading days, you want to start your own trading. In such a case, Nifty Bees plays a very important role. Why or how? So normally what happens in a Nifty Bees, the haircut is only like 20 to 25%. That means if you have a portfolio of like 1 crore and you want to take an exposure in the market in the future and option category, in such a case what happen? So you can like you can invest your money in the Nifty Bees like 1 crore, and same time you can take the benefit of Nifty decrease and Nifty increase, whatever the things is there. And also that 75 lakhs whatever is available in your account, that margin money you can use for trading purpose. If you are an expert, you can sell option, you can earn like few percentage like 10% to 20% per annum from that Nifty Bees. Like it's extra income. So these are some of the benefits of Nifty Bees. And the second thing is basically what are the disadvantages of Nifty Bees. So as for me, the disadvantages is basically sometimes what happen, market will consolidate or market will be in the sideways. So what happen in such a case, Nifty will not perform. It is very frustrating if you see your portfolio is not growing for 2 years, like 3 years, because the market is not performing. Maybe different like stocks are performing, but in the broader index, the Nifty is not performing. Due to that, what will happen? So you may lose what I can say, the interest in the Nifty Bees. And second thing, second benefit, second like demerit of the Nifty Bees is basically what happens in a stock. If you can find a multi-bagger stock and you can invest that money in a multi-bagger, then your money may compound in the range of like 10 times, 20 times within a period of like 5 years, 10 years. But in case of Nifty, it will not happen. Normally, it doesn't happen. So your money will grow in the range very slowly. So what is the main purpose of Nifty Bees? Try to understand whenever you are building a portfolio, you have to park some amount of money for investing in the Nifty Bees. So that what will happen? So if you are taking a risk in the stock and you don't want to avoid, you don't want to take a risk, like you can put the money in the Nifty Bees. Take the example, 100 rupees is a portfolio in the stock market, and you are putting like 90 rupees in like stocks and 10 rupees in Nifty Bees. That will give a good hedge, and it is also very risk free. The 10% whatever you are putting, that is very risk free. It can give a good return, and it is also very less risky. Okay, so these are basically the broader advantages and disadvantages of Nifty Bees. Let us discuss about the types of Nifty Bees available in the Indian market. So broadly, there are 2 types of Nifty Bees are available. So before 2020, only one type of Nifty Bees were available. But recently, one of the Nifty Bees, the DSP BlackRock, they have introduced. So I'm going to discuss about also what is the Nifty Bees and what are the different types of Nifty Bees available in the market. The first Nifty Bees is basically equally weighted Nifty Bees. So this is basically the newly launched Nifty Bees, that is basically DSP BlackRock Nifty Bees. So what happens in such a case, if you have 100 rupees and you are putting 100 rupees in the Nifty Bees, and you know Nifty is consisting of like 50 stocks, that means 100 rupees divided by 50, that is coming 2. So if you are putting 100 rupees, the 2%, what are the 2% will allocated to each stock. Like there are 50 stocks, one stock, every stock will get 2% of your money. So that is basically DSP BlackRock, what I can say, Nifty Bees. So, and second Nifty Bees is basically a percentage weight Nifty Bees. So take the example, Nifty is consisting of only 2 stocks. One is Reliance and one is HDFC Bank. and HDFC Bank's market cap is basically 60% and Reliance like market cap is basically 40%. So if you put your money in a Nifty Bees, which is basically a percentage weight Nifty Bees like Nippon India Nifty Bees, in such a case what will happen, 60 rupees will be allocated to HDFC Bank and 40 rupees will be allocated to Reliance. So these are basically the two categories of Nifty Bees which is available in the Indian market. So in my next video I am going to talk about like the merit of these what I can say two types of Nifty Bees, the demerit of Nifty Bees, and how you can prepare a strategy to put your money or to invest your money in Nifty Bees. And and also I'm going to talk about like how you can like plan your retirement fund by putting the money in Nifty Bees, and I'm going to show you if you put 5,000 rupees, 10,000 rupees in Nifty Bees, after like 20 years, 30 years, at the age of like 58, if you want to retire, how much corpus you can generate by putting the money in the Nifty Bees. So thank you so much for watching, and please subscribe to my channel. I'm going to bring a lot of finance and financial like what I can say videos. So where I'm going to cover all the asset classes. It may be the equity, it may be debt, it may be the real estate, it may be the fixed deposit, it may be the crypto, it may be gold. So all the asset, all the things. It is basically my main purpose is basically I want to bring all the thing in one place so that any person who wants to gain a knowledge regarding the finance and financial market or business related knowledge. So I am going to put everything in one place. So thank you so much for watching. Please subscribe to my channel and please support me. Thank you so much.